We have Dylan here with us. Dylan, let's bring you up here. What's going on, man?
How's it going, guys? Thanks for having me on.
Of course. All right, let's start off first, just kind of introducing you to everyone. You work at Bitcoin Magazine. Explain a little bit about what you do there and kind of what you're personally interested in terms of Bitcoin and the macro environment.
Yeah, so I work at Bitcoin Magazine and I lead off their premium markets product. So we cover, it's called the Deep Dive, and we cover global macroeconomics, on-chain analytics, and Bitcoin derivative markets. And really just kind of combining like the day-to-day, week-to-week, month-to-month moves in the Bitcoin markets or just financial markets more broadly, and combine that with this, 10-year or like really this kind of monetization process of Bitcoin, and combining, both of those views, like keeping that sort of, zoomed out view, as well as just kind of giving some context to, about what's happening and why.
Yeah, and I think that's part of what is so fascinating about the way that you cover this is you always keep the macro environment in mind as you look at the Bitcoin market. So we've got a bunch of charts that we're going to run through here. Let's start first with the major central banks' total assets as they continue to rise, and help us understand just kind of contextually, like, why is this chart important and what does it really tell you as you look at it?
Yeah, so I mean, there's a couple of things. Like, one, we have this new technology, right? We have Bitcoin, and so many people are trying to figure this out, and there's a lot of noise in like the so-called crypto space, right? We all know this, but really, I think what's happening and what's forcing people to adopt this technology, this monetary technology, is we're kind of at the end of this long-term debt cycle, and most people don't really understand this, especially if they're not studying macroeconomics or have a in-depth history of monetary assets and debt cycles, right? But starting in 08 and in 2020, we kind of hit the zero lower bound, and so central banks kind of ran out of their main option, the firepower, which is interest rate policy. And so what they went to is quantitative easing. It's essentially just stuffing a bunch of cash in the bond market, or really, I mean, simplify it as printing money, right? But it's really just lowering the discount rate of or the cost of capital everywhere on the planet. And so these are all, the global major central banks. And what this is just showing is that they're trying to keep the system glued together. But it's cracking. It's cracking at the seams. And so this is, actively forcing people into Bitcoin or to seek shelter elsewhere.
And so when we look at the total assets, obviously every major central bank just absolutely took off in 2020 for obvious reasons. But also in the United States, we've got this debt chart that shows a very similar type of growth there at the end in 2020. So explain what's going on here.
Yeah, so this is looking at just like total debt to GDP, non-financial, financial. And right now, total debt to GDP is at 400%. And so my good buddy, Greg Foss, he was on your show. He likes to always talk about how it's a mathematical certainty that fiat will debase because of basically this chart, with debt to GDP at 400%, given that all debt has to be repaid plus interest, unless the economy is growing at 12, 15% a year in real terms, then we're in a debt spiral. And there's really no way out, unless it's default, which is politically not feasible, or to basically debase the currency. And so that's the game we're playing. And really, a lot of people get upset with the puppets of the game, but it's more systematic than that. It's not about Trump or Biden or Powell or whoever you want to call shots at. And I get it, I do it too sometimes. But it's systematic. We're in a debt spiral, and mathematically, there's no way out of this except to continue printing and attempting to kick the can down the road. But more and more people are waking up and saying, I don't want to play this game.
Yeah, I think that's a great way to describe it. We've got a chart here of the real 10-year Treasury bond yield. Describe what's going on with the 10-year yield, but also what the relationship between the 10-year yield and inflation is.
Yeah, so the Fed, or like the government's way of measuring inflation, I believe is kind of flawed. And I think most people that are paying attention do as well. But just for the sake of the argument, we'll use it. It's, there's PCE or CPI, but it's basically just consumer price inflation. And we're indexing that against what a Treasury bond could get you, what a lot of people in financial markets, they use as their risk-free rate. Then what you're looking at is essentially in this chart, when you break that zero lower bound, the cost of capital is negative, right? So when you're evaluating stocks, real estate, any asset, when the cost of capital is negative, what's the fair value? And the answer is it doesn't compute. It breaks. So if you're holding a bond, or if you're sitting on a 60-40 portfolio, if you're in your pension or your 401k, you're losing in real terms. And even if nominally you're making out okay, you're basically getting pillaged if you're holding bonds or a lot of these financial assets, because the cost of capital is so distorted, and that's because it's a centrally planned market. And so I think these are like the broad macro trends here, and this is why I think Bitcoin would be important regardless. And Satoshi literally released Bitcoin because of these problems. I think he chose to release Bitcoin kind of strategically, but this is why Bitcoin is especially so important.
And when we look at this idea of global aggregate negative yielding debt, it just is nuts, right? To see that now there's about $14 trillion total of this. How does this fit into the macro picture?
Yeah, so this is kind of similar to the past charts, but basically, a lot of people like to call Bitcoin a bubble. I think it's about 900 billion today in total market cap. But just for context, there's $14 trillion, or I think this was from last month, but around $15 trillion of debt today that is guaranteed to lose money. It's people signing up, giving $100 to receive 99 back. That's simplified, but essentially that's what's going on. There's $14 trillion in that bucket. So when you're calling Bitcoin a bubble, this new global monetary asset that no one can mess with, I think you really need some context here about just how big of an everything bubble there is. In this great monetary experiment that central banks are conducting with global fiat currencies everywhere. We've never seen anything like it. Bitcoin at 900 billion is an absolute drop in the bucket. And so, think about $14 trillion. It's something that, a million millions is a trillion. Just for some context, it's mind boggling. And so, yeah, Bitcoin is extremely cheap.
Now, when we think about a potential solution, I think most people who are watching this think Bitcoin could serve as a solution or a part of the solution. And we look at this chart here of Bitcoin hash rate, and you so eloquently put, it's going up forever, Laura. Maybe describe the it's going up forever, Laura joke first, and then we can talk about the chart.
Yeah, so I stole that from Michael Saylor. I think he had an interview with Laura. I forget her last name, but
Laura Shin.
Talking about the price. Laura Shin, yeah, talking about the price. But in this case, I'm talking about the hash rate. And essentially, for those who are not aware, hash rate is essentially it's just this Darwinistic capitalistic competition to mine Bitcoin. And this is in log scale. So if you're looking at this chart, it's going up in factors of 10, or I'm sorry, 100. No, 10. And so, if in linear terms, it looks absolutely ridiculous. It looks like it's hockey sticking up. But what this is showing is that, the competition to sell energy to the Bitcoin network, and basically all or mostly wasted energy or underutilized energy, right? This is this free market thing. There's no one being coerced into mining Bitcoin. And oftentimes the energy, the cost is zero or negative, right? Like these oil producers are literally, they have to pay because they're emitting this methane into the atmosphere. And so Bitcoin mining is a solution to, hey, I'm going to turn this wasted energy into global money, global decentralized money. And so, what this is you're seeing just this new monetary asset born, and the energy cost is what the free market is willing to pay to secure this monetary network. And so, hash rate, it's not something that's like easy to explain to someone that's just, falling down the Bitcoin rabbit hole or the path, but it's one of the most important aspects.
Related to the hash rate is this idea of mining difficulty, and kind of this every 2 weeks, there's an adjustment to the network based on how much computing power is on there. We've got a chart that shows that actual mining difficulty. Describe kind of how you think about this. And, is it one of the most beautifully designed technical systems in the world?
Yeah. So mining difficulty is essentially, as the price of Bitcoin rises, or think about any commodity, right? When a commodity becomes more valuable, gold, oil, copper, silver, there's a larger economic incentive to go produce that thing naturally. That's supply and demand. But with Bitcoin difficulty, there's over 2 week periods, or technically every 2016 blocks, but for the sake of this, every 2 weeks, difficulty adjusts upwards or downwards depending on how much hash rate has fallen or risen. So if the price of Bitcoin is ripping and there's this huge economic incentive to go produce more of it, just like say if the price of gold was increasing, the price of gold doubled, Well, all of these people are going to go try to go mine gold. But with Bitcoin, difficulty adjusts to make it incrementally that much harder to produce the thing. And so it's essentially, the difficulty adjustment continues to kind of ratchet up production costs as more and more energy expenditure and people want to go produce this thing or mine it. And so if you could, I actually arranged the charts in a little bit of a different order, but if you could go down to the energy cost chart, it's two things down.
Yep.
I think this is one of the most beautiful things. This is by Charles Edwards at Capriol Investments. He kind of put an estimate for the Bitcoin energy value using inputs like hash rate and ASIC estimates. But what this shows, right? So if you're just looking at 2021, the price tanked. A bunch of miners were basically, because, for political reasons, were kicked out of China. And what happened to the energy value? The energy value tanked. Well, difficulty ratcheted downwards multiple times. At one point, there was a negative 29% difficulty adjustment. And what did that do? It increased the economic incentive to go mine Bitcoin, to go sell your energy to the Bitcoin network.
So
Dylan,
in this chart, walk us through real quick what everyone's looking at here. So what the green, the blue, and the red, what exactly are they looking at so that everyone can make sure they're paying attention?
Yeah, so the green is the hash rate. That's above, and the blue is the Bitcoin price, right?
Yep.
And so the red is using various inputs such as hash rate as well as some assumptions, but it's basically giving you a production cost, how much miners are basically paying for every one Bitcoin to produce one Bitcoin. And so right now that's about 24,000. In May that was about 14,000. But say tomorrow the price of Bitcoin tanks, minus 50%, like happened in March of 2021 or March of 2020. There's this huge liquidity crisis. Now all of a sudden it's not economical to mine Bitcoin. Well, what happens? Miners unplug, hash rate plummets. Well, 2 weeks from now, difficulty is going to downwards adjust, and it's going to incentivize all of these miners to come back and secure the network and to mine Bitcoin again. And it's going to lower that production cost, and it's going to limit that sell pressure on the market. And so it's just kind of this beautiful, almost like it's an engineering discovery, almost, I would say, not even an invention. Satoshi discovered Bitcoin as this decentralized monetary network that runs just on economic incentives and nothing else. And it's, when you dig into it, it's one of the most, beautiful engineering machines ever.
So when we go and we look at this chart around the liquid and illiquid supply, we've had Will. I know you and Will are very close and talk almost daily, from what I understand. We've had him talking a bunch about this illiquid supply and the supply shocks. The chart that you've got here around the liquid and illiquid supply, explain kind of how you look at this and what are you looking for in the chart as you look at it on a daily basis?
Yeah, so most of these charts are kind of covering broad trends. So this is the Bitcoin liquid and illiquid supply, and so the total supply of Bitcoin is, I think it's like 18.8 million. But over time, what you see is an increasingly large amount of Bitcoin is becoming illiquid. It's basically being locked away and not hitting the market again. And that free float, despite the issuance kind of increasing, or the amount of Bitcoin in circulation increasing, while the issuance on a percentage basis is decreasing. That free float of Bitcoin available to the market continues to kind of to chip away. And especially since March of 2020, we've seen, that illiquid supply hockey stick upwards when you're looking at in a ratio sense. So over time, what's the trend, right? There's manipulated cost of capital globally. Everybody and more people are kind of waking up to say, hey, this game's rigged and I don't want to play this anymore. And here we have this monetary asset that no one controls, that no one can debase, that no one can manipulate, that is just on economic incentives, having people adopt it, having institutions adopt it, having nation states adopt it. And so this is just basic supply and demand. There's less and less Bitcoin that are, hitting the market every single day as you have more and more people kind of hoarding this new asset, saying, I don't want to sell for dollars ever. Like I don't have an incentive to ever sell, right? And I think more and more people, like the Michael Saylors of the world, the billionaires of the world, and even just like the average pleb or someone in Nigeria, right? This is a global phenomenon. Are saying, hey, I just want to store my value in this thing. And so, that illiquid supply is just kind of showing this trend and showing really people just waking up to this.
When you look at the realized cap versus the market cap, how bullish does this make you feel when you actually see just the constant long-term trend of appreciation?
Yeah, so I think realized price is something that I really like to look at because when you're talking about market cap or just the price can get bid at the margin really easily. But because we have this transparent ledger, right? we have the Bitcoin network, the Bitcoin blockchain has a ledger of every coin in existence and when was the last time it moved, right? So Satoshi's coins, which he mined back in the early days, they never moved. In this metric, they're worth 0. And coins that were acquired in April and haven't moved since are worth about 60,000 per coin. And so when you have this realized cap, which is like basically the price paid for every single coin, you can kind of think of it like that. And over time, I think the day-to-day volatility of the BTC USD price, it's volatile and it whips up and down, and there's derivatives and all this. But when you're looking at realized price, it's essentially it's like a more pure view of the monetization process of this network. It's like, hey, the value of every coin, the value of this entire network continues to tick up and up and up and up, and it's basically going up forever. And so I love to look at realized cap as more of like a realized price, like kind of a fair value of Bitcoin. And very rarely do you see the price dip under that.
How old are you?
I'm 20.
You're 20. When you think about you and your friends, explain, my brother here is 25 now, 25. And we talk a lot about the psychological difference of how 20, 24, 25-year-olds think about financial markets than the older generation. Even me at 33, I'm kind of in the middle of some of those folks. How do you think about equities, bonds, crypto, Bitcoin versus anything else? Like, are you and all of your friends all in on Bitcoin, or do they have diversified portfolios? Like, how do you guys think through investing?
Yeah, so I had kind of quite the orange pill moment, I would say, over the last couple of years, and I think I've gotten most of my friends there as well. But I kind of think of it like going back to the manipulated cost of capital and legacy finance. There's just no way that I'm ever going to buy a bond, at least in today's environment. It's just there's just no way in hell I'm ever going to fund the U.S. government for 1% a year in nominal terms. When you're thinking about equities, there's also, because of this broken manipulated cost of capital, you're looking at sky high PE ratios, all-time high corporate debt to GDP. I just think from a risk reward standpoint, it's not too attractive. And honestly, I firmly believe that over the next 10 years, equities will rip in nominal terms. I think they'll do very well. But when you're looking at this on a real basis, I think they might not do too great, especially when you're calculating the opportunity cost in Bitcoin terms. Because if you couldn't tell, I've come to this conclusion, or I have this thesis that the risk-free rate of everything, the opportunity cost of everything is Bitcoin. And people will say, like, are you kidding me? It drew down 50% in a couple months. But I'm not thinking on that time frame. I'm thinking years, decades. And so I know one thing for sure is that the cost of producing Bitcoin will continue to go up forever, essentially, because of the economic incentives and because of basically how this protocol works, the halvings, the difficulty adjustment, everything we've covered. And so when I think about how do I want to allocate my wealth, how do I want to save my time and energy into the future, with Bitcoin priced under $1 trillion, there's basically no other place that I would think about allocating capital at the moment. And I think diversification in this sense is not something that I'm really too interested in. I do own some Bitcoin related equities with a few basis points in my portfolio, but for the most part, stacking straight to cold storage and that's it, because I can handle a 50% drawdown. Volatility at 20 years old is not something I'm too concerned with. It's a different story for someone that's 65 and needs to draw from that capital every day, but that's just not the case for me. So stacking sats and just chilling.
What I think is so fascinating about this is, one, I agree with you and think that the investment strategy is incredibly compelling given the macro environment, the asset itself, and then kind of your age, risk profile, and just the long time horizon. But it's no different than some of the timeless investing advice that others have heard. So like Warren Buffett, for example, talks all the time about if you buy a great asset, the best time to sell is never. Right, just hold it literally forever. And so stacking sats may not be the same vernacular that he would use. A digital decentralized currency may not be the thing he's interested in. But if it ends up in hindsight being a great asset and people buy it and they hold it forever, it's no different than that timeless investment advice that he's been telling his shareholders and kind of the public markets forever, right?
Yeah, in a Warren Buffett style approach, like the markets are overpriced. And what I'm using as my currency or my savings. So I'm not investing at the moment. I'm just simply saving because I'll wait for the market to correct in Bitcoin terms. When looking at everything, look at any chart over the last 5 years or the last 3 years in Bitcoin terms, and I think that's the truth. That's what's occurring, and obviously you're not going to see a 200% compounded annual growth rate like forever. That's just not sustainable. But I think Bitcoin is going to see this decade at least 100x appreciation. Maybe maybe a little less, maybe a little more, but we're just getting started with this thing. In terms of global adoption, if you look at global wealth, it's extremely early, and I respect people that can make it trading in and out every day, but ultimately that's just something that I, for the most part, stay away from, and I just I'm going to produce value, and I'm going to store that value in what I think is going to protect it best.
I've got my brother John here with me. John, what questions you got?
Yeah, thanks for doing this, Dylan. I love how you talk about you're 20 years old, so you can withstand the volatility and look for that future growth. But a lot of our followers are also similar to you as the younger demographic and everything. Can you talk about your journey to Bitcoin and how you found it, and then how you found your and how you go about working at Bitcoin Magazine?
Yeah, totally. Honestly, part of my journey was basically like podcasts like this, and just like the free education that was available online. I went to college for 1 year, studied business and economics, but I dropped out because I was learning more on Twitter and reading books that people recommended. And so I think for anyone that's kind of interested in this space, but more broadly, in the digital economy, you don't need a degree, you don't need like the credentialism of the past. And there's so many ways to just kind of make it out there today on the internet, and to learn and to reach out to people. Like I learned a lot about Bitcoin from watching and listening to the Pomp podcast while I worked a day job, right? So, and various other ones, but it was something I stumbled upon Bitcoin late high school while I was just trying to figure out investing. And I just logged onto Twitter and just read what I thought smart people had to say about it. And so that was more valuable for me than listening to my boomer professor over a Zoom call when they sent us home from COVID. So, it was a no-brainer for me to be like, hey, like I'm just going to drop out. And I just worked a regular job for like six months, and got a DM basically for a job opportunity, which was maybe a stroke of luck, maybe not, but it turned into something that I hope will last.
Nice.
So is it true that Bitcoin made you drop out of college?
Yeah, I for sure. I like tweeted about it and told my friends and stuff like, hey, like I'm dropping out, and they're like, just to work a job to stack sats. And they're like, what's sats and why are you dropping out? Like, what, are you crazy? And like, I honestly did it like that. I read a couple of books that kind of melted my brain, like The Sovereign Individual I read, and then Price of Tomorrow by Jeff Booth. Basically like how the internet was basically putting the cost of education and learning things to zero. And that, the credentialism of the industrial age was dissipating with the internet. And so for me, I was like, okay, why am I studying finance and economics, learning Keynesian economics, stuff I don't believe? Like they're telling me, hey, inflation's 2%. And I was like, no, it's not. And they're like, yeah, the CPI says so. And it was like, that was the answer. I was like, okay, well, I don't think this is too valuable for me. So it was something like, I'm going to drop. And I got a lot of like pushback from it. Initially, my parents were a little skeptical, but now I think they're fully orange pilled and they're stacking themselves, and they agree with my decision now. But it definitely was not like the traditional path per se.
You may not know that I used to say this. I don't want to go ahead and say it. I feel like we're safe now. The virus is spreading. That's what happens. It is basically like Bitcoin used to be described as this mind virus, right? Like once you learn about it, you just can't stop thinking about it. You can't stop seeing the world in a different way. Then you start to tell people and explain it, and it just spreads through a group of people in terms of the education and the knowledge, and kind of that red pill or that orange pill type thing. Talk a little bit about, you mentioned kind of like not getting the formal education and the Keynesian economics. And I actually think it's a really interesting point that most older people probably don't think from this perspective. But if you go to college and they teach you something that either was true about the world in the past, but no longer is true, or two, is a way to look at the world that you don't agree with, in some weird way, not only are you wasting your time or money, but on top of that, you're actually having information put into your brain that ends up being inaccurate and therefore could be incredibly detrimental. And so dropping out in some weird way is a better way to pursue knowledge than actually staying there and getting that information, right?
Yeah, totally. I mean, they were teaching me, they were bringing up, textbooks from, I don't even know when, the 70s or 80s. And they were saying, hey, this is the Phillips curve. and this is inflation and this is employment and they have this relationship. And I was like, no, they don't. Look at the data. And it was like, it was just weird things like that. It was just like, that was anecdotal, but it was like, maybe if I was an engineer or something where I needed to go to school, it would be different. But I was studying like finance and economics, and I was literally listening to podcasts more than I was attending in classes and doing homework. And so I was like, all right, screw this. Like, and I dropped out and I literally picked up a manual labor job. It's like, it wasn't too fun, but I literally listened to 8 hours of Bitcoin podcasts a day for like 6-7 months. And I think I got the best education of my life. Like it turned into a legit job opportunity. I get to hang on Twitter all day and write about Bitcoin and financial markets. It's something that and that's completely self-taught over the internet. And like, I'm not like bragging or anything. I'm just like trying to say that it's, the cost of a lot of this information and the access to it. And you have some of the smartest people in the world sharing their thoughts for free on these platforms. Like that's something that, college, I don't think can keep up with, right? Like I was sitting at home in March, April, May, after they sent everyone home for COVID. And I was paying to have these boomers on a Zoom call explain things to me that I knew factually were just incorrect. And so, I think this is a gradual change, but I think we're more of like at the suddenly point of things for sure.
What was going on in the economic or finance classes in college? Like, did they have any clue about Bitcoin? Did you ever ask them about Bitcoin? Were they just dismissive of it? Like, what was going on?
Yeah, I did ask a couple guys, a couple of my economics professors. I shared like some of the stuff from Plan B, like stock to flow. And I did ask a couple of my computer science professors. I was like, hey, like, what do you think about this? And I got a business call from a blockchain company, which, say what you want about blockchain, but I didn't really think they understood what was occurring, right? It was like, oh yeah, blockchain technology is very interesting. And without realizing that, I don't even like blockchain, to be honest. I prefer time chain when talking about Bitcoin. Like, Satoshi solved the Byzantines general's problem. And so I think like the rabbit hole goes very, very deep with Bitcoin and what it solves and how big, of a problem Bitcoin solves. It's literally the total addressable market for Bitcoin is the biggest in the world. And so, I don't think any of my professors grasped that. It was something that took me months or years even of just like intense studying, intense learning, obsessive learning, right? The virus is literally spreading. And so, yeah, I think that it was something that they didn't really grasp at all, which was just why it was another reason to kind of leave and pursue something else.
What do you think about other non-Bitcoin crypto assets? Are you interested in any of that? Do you think they have any viability? How do you look at kind of the non-Bitcoin part of the industry?
Yeah, I don't own any other cryptos. And it's not because I'm not willing to look into them. I actually have done a lot of research to try to understand Ethereum, any other smart contract platform, NFTs. I've done my digging, and ultimately, what I've kind of come to the conclusion of is that proof of work and what Satoshi kind of airdropped on the world, proof of work basically linked the digital and the physical realm. And it's this 0 to 1 invention. And so, and it's the biggest, it solves the biggest problem in the world, which is basically the money's broken. And so, with basically Bitcoin is the first and only really thermodynamically secured monetary network, in the sense that you have this link of this ledger is essentially proof of energy expenditure. And it's this immutable thing that nobody can change or alter. And so I think the genie's out of the bottle in that sense, and that that's something that is extremely compelling for me. Like in terms of crypto, NFTs, if you want to speculate on all these other things, proof of stake, that's great. And I think it's more of like a computer science experiment / tech startup kind of thing. But I think fundamentally Bitcoin is here, and then crypto, anything else is separate, right? And it's tough because there's so much nuance there in terms of decentralization as a spectrum, like, how decentralized is enough, all of these things. But ultimately, I think it's clear to me, at least, there's Bitcoin, and then there's cryptos and whatever else you want to build. And again, like I'm Gary Gensler coming in and saying like, these are securities, like, let the free market do its work. Like I don't want any of these things to be shut down or killed or whatever. But ultimately, I think, 20 years from now, Bitcoin is a sure bet. And some people might think I'm crazy for saying that, but I think from a game theoretic standpoint, Bitcoin's won. It's already won. But all these other things, build fast and break things, great. Like, go ahead, but I'm not interested in really speculating. I just want to save my value and have it be a sure bet. So.
For sure. And then through the end of this year, obviously, I think most of the data that you post on Twitter or talk about shows that we're still in a bull market. What's your kind of price thoughts or price predictions for the end of 2021?
Yeah, I think, something I'm watching closely is the Evergrande thing. There's been a lot of talk about that recently on Twitter, but there's potential for there, kind of be some sort of spillover contagion effects with that. But ultimately, the supply dynamics, I mean, I do talk with Will every day, and I'm looking at that same data. It's extremely bullish, like, the most bullish I've ever been. And so, these supply dynamics, it doesn't lie. And a lot of times derivatives will whipsaw price back and forth. But I think ultimately, I'm pretty confident in all-time highs breaking by 2021. And at that point, it's off to the races. Bitcoin trades reflexively. Once all-time highs are broken or, essentially people just stop selling, price gets bid really hard at the margin. And you're going to have a ton of new capital kind of flowing in. There's a lot of talk behind the scenes of big money, buying in this range. And so, I think that's only going to, kind of pick up from here. And I think, once 64K, 65K is broken, it's off to the races. And so, I'm pretty confident in that occurring in 2021. And, depending on how fast a rip to 100K is in the cards. And so price predictions are kind of hard, but, supply dynamics are extremely bullish. And especially if China or, the Fed broadly kind of respond to any sort of credit contagion or, anything happening in the legacy markets, that's just rocket fuel for Bitcoin.
And when you think about this, are you a subscriber to this like Supercycle theory that once we break the all-time high, we go up, hundreds of thousands of dollars? Or is it something where maybe Will is in more of the thought process of like $185,000 based on some of the models he's looking at? Like how severe is that reflexivity once we break the all-time highs in your opinion?
Yeah, I mean, I'm a little in both camps. So, I mean, one is like, I'm just going to be looking at the data, but I think there's a real chance, and I don't know if it happens in 2022 or 2024, but at some point, Bitcoin's success is going to just be so obvious, and the narrative is not going to be between, with us just kind of niche, econ nerds or, like hardcore Bitcoiners, like libertarian kind of thing. I think that's even shifted recently, but it's going to be, oh my God, the legacy financial world. It's like, I'm sitting on $1 trillion bond tranche and I'm getting a negative yield, right? Like these guys that are basically still locked in, they can't get Bitcoin exposure yet. But if an ETF comes, as it just gets more mainstreamed, intertwined with, the legacy system, companies like NYDIG and all of this, they're going to unlock trillions and trillions of dollars of capital to access the Bitcoin markets. And the most bullish aspect is that when you're looking at a liquid supply, when you're just looking at the free float of this thing that's trading every single day, about 14, 15 million Bitcoin aren't available to be sold. And like people like me, like I don't have a $200,000 price target where I'm selling all my Bitcoin. I'm just like, I might, sell a few basis points or, obviously money's, meant to be spent. But the reality is like my price target for Bitcoin is infinity. Like I don't plan on, I'll spend Bitcoin when it's legal tender and I don't pay taxes on it. And so like, I think that's the reality here. And you're going to have tens of trillions of dollars chasing, a few million Bitcoin. And so, do the math on that. But ultimately, I think at some point over the next 5 to 10 years, maybe, I don't think it gets that far, the dollar price becomes somewhat irrelevant as trust is lost. We've just pushed, they've kicked the can so far. And what happens next time the legacy markets crash? Well, the Fed's used all its ammo, and it's gonna just they're gonna blow the load again, and it's gonna get, I think it's gonna get kind of crazy. So super cycle, not entirely sure. I think naturally there's gonna be boom and busts. 50% drawdowns are here to stay, especially with how over indebted the legacy system is, right? You're gonna see these huge cascades just because of how much debt is in the system. And then how much impairment that causes with the legacy system, fiat money's created through lending, but it's also destroyed through debt default, right? So when that happens, you're going to see just massive drawdowns in equities, real estate, Bitcoin, like that's just where we are in the system. And so they're going to have to reinflate it all. And that's when Bitcoin trades to 7 figures.
I tend to think that you're more right than wrong here. Before I let you go, where can we send people? What are you at? You're at 45.9 thousand followers. So for sure, we're going to get you to 46,000. I don't know how high we can go. We've been telling folks to go follow you here in the comments. Other than following you on Twitter, I'll put the link in the description right now. Where else do you want us to send people?
Yeah, so you can find, I do the deep dive with Bitcoin Magazine. So that's a daily newsletter. We're covering on kind of most of the stuff we've talked about. If you check that out, it's like, go to Bitcoin Magazine. I think it's at the top right. It's we got a special discount code for today's show. It's $10 a month for 6 months, discount code POMP. So just so you can give it a try. I mean, I think I'm really happy with the work we put out. We put out about 20 pieces a week that are pretty in-depth research, covering kind of the, more of the like in the weeds of the on-chain and derivative market stuff. So, those price predictions you were asking me about, we're not giving straight up trading signals, but, covering probabilities and various things that could happen in the market. So yeah, that's where you can find me. Twitter, I hang out a lot. Hit my DMs if you have any questions.
All right. So before I let you go, we're going to take a couple of questions from the audience real quick. So if anyone's got questions, go ahead and leave them in the chat here, and John's going to pick one or two of them for us to ask. But Dylan, you obviously can't see the chat at the moment, but you have a new nickname according to the audience. They are calling you Dylan Sailor. Which and they keep saying that you dropped your crown, and they are posting the king crown in here. So I think they very much are enjoying the content. All right, so questions here, John. Anything that you see that you think is good?
One person asked earlier on the show was, are you looking at anything besides Bitcoin for investments, real estate, like any different kind of assets, or is it just Bitcoin?
Yeah, so I think at this stage in my life, right, like being 20 years old, just trying to accumulate as much capital as possible, diversification doesn't really make sense because I'm viewing things in like basically Bitcoin denomination. So when I'm evaluating equities, right, so I think Amazon is a fantastic business, just for example, but I don't think Amazon is worth 42 million Bitcoin or whatever, right? And so just viewing any sort of investment through that lens is something that I try to do. I think Amazon, the NASDAQ, real estate more broadly, like whatever kind of legacy investment you're talking about, it's going to go up, and it's going to go up a lot in dollar terms over the next decade. I'm pretty confident in that due to just the debt dynamics. But if your baseline is dollars, you're doing great. If your baseline is Bitcoin, well, I think you're gonna probably get killed. And so, I'll buy Amazon stock when the market cap is less than 500,000 Bitcoin or whatever it is, right? Just kind of viewing things through a Bitcoin denomination is what I do. And that's why, that's what leads me to basically I have over 100% of my net worth in Bitcoin, because of liabilities.
So a couple of people are asking, what would make you bearish, or what would make you sell Bitcoin in terms of things happening in the market?
What would make me bearish is basically over a long period of time, not something just like China, but hash rate decreasing significantly and staying there, whether and I don't see how that happens. It would have to be, maybe there's this other proof of work network that doesn't have the liquidity of Bitcoin, doesn't have the network effect, all of these things, which leads me to be supremely confident that Bitcoin has already won. But if hash rate, left the network to go somewhere else, then that would really make me kind of rethink the thesis, because ultimately, Bitcoin is the most secure proof of work network. And because of the network effects that come off of that, the security, the immutability of the protocol, like all of these things, that leaves me supremely confident in my holdings, my savings. And so the dollar price, even if Bitcoin went to 15K, and because of the Evergrande spillover and legacy market blew up, I'm buying hand over fist, and I'm going to go to every bank I can and try to get a loan, right? There's not a dollar volatility move that makes me sell. What makes me sell is some fundamental flaw in the protocol that, millions of people looking at this thing every day haven't found yet. But that would make me rethink my thesis. No dollar volatility in the market.
So I'm going to ask you to clarify this, because I don't think people caught this. When I asked you how much of your portfolios in Bitcoin, you said over 100%, which is not usually an answer people hear. So explain what you mean by that.
Yeah, I've taken out, I've basically gotten my hands on any sort of credit I could in 2020, around April, May, June timeframe. A lot of like, I actually got, not financial advice, guys.
Terms and conditions.
I took out like, cause I was 18, 19 at the time. Like I wasn't available to get like, $1 billion at zero, like Michael Saylor. But I could get I got a lot of 0% credit cards for 18 months. So I stacked my butt off in that time frame. And so I still am carrying that debt because honestly, again, not financial advice, but 15%, 12% APR, whatever it is, I'm pretty confident in Bitcoin outperforming that. So when the benchmark is Bitcoin, fiat denominated liabilities, like I have a cash flow, I work, I have I get a paycheck, like it's not something that I'm too worried about. So yeah, if you're looking at a net worth basis, I have over 100% in Bitcoin.
You understand that is insane by boomer standards, and it's par for the course in Bitcoin world.
Yeah, I told people that back in 2020, even today, and some people look at me like I have three heads, and I'm like, no, man, it's prudent. And I like, they think I'm joking. I'm like, no, it's not. It's prudent for me. And so, yeah, I mean, again, not financial advice, but when you're like, why, if you're just looking at like, say, Michael Saylor, right, or anybody that's taking on dollar liabilities, Michael Saylor, Bitcoin has to, like, when he's borrowing 6% at 500 million to buy a 37K. Well, what's 6% CAGR? What's Bitcoin have to be at in 2027? Like 50K maybe for him to break even. And so like, obviously everyone's situation is different. But if you can service the debt, if you can service this, the coupon, the interest payment, then I don't think that's risky. Don't over leverage yourself and have it all blow up because you don't want to become a forced seller. But again, yeah, when you're evaluating things with this artificial cost of capital, against this monetizing digital bearer asset, the math is I think is on your side.
Yeah, it's absolutely incredible. In some weird way, I'm proud of you. Good job. Not financial advice, but seems to be working out for you. All right, everyone go follow Dylan on Twitter. I'll put his Twitter handle one more time in the chat. Make sure you go follow him. Hopefully we can get him to, let's see, have we already, oh yeah, we already pumped you over 46,000. You're well on your way. The other thing is, John, what do we think Dylan's follower count is on Twitter by the end of the year?
End of the year, 100K.
Ooh, more than double. Look, he's like, I'll take that. I'll take that. That's all right. John's at 50K. Are you and Dylan going to race to 100?
We'll see what Bitcoin does.
It's on.
John, what do you got? You got 50?
Yeah, I got 50.
Oh, Dylan's at 46. So he's got Bitcoin behind him. John will start tweeting a lot about Bitcoin if all of a sudden it
send me some
off.
charts.
All right, buddy. Listen, thank you so much for doing this. We appreciate it. We'll definitely do it again in the future, and keep going, man. You're doing a great job, and I think people really enjoyed it.
Thanks for having me on, guys. It was a lot of fun.
All right, see you later. What's up, guys? Bang, bang. Thanks so much for watching the Best Business Show today. If we're going to be the best business show, we obviously need the best partner. That's why the exclusive sponsor of the Best Business Show is SoFi. They're an all-in-one platform that allows you to invest in all kinds of different assets, including stocks, ETFs, crypto, IPOs, and they even have an automated investing function, if that's your thing. So before we start getting after it again, make sure that you go download SoFi, you get an invest account, and when you make your first crypto trade, regardless of what you buy, they'll give you $10 in Bitcoin for free. It's that simple. Head on over to SoFi.com/pomp to get started today. Thanks so much for watching, and I hope that you come back and watch more of the Best Business Show tomorrow.